Hello and welcome to The Trend is Your Friend. I'm your host, Matthew Carr, tactical trend strategist for Money Map Press. Think of me as your Sherpa on the Mount Everest, like ascent to profiting with trends, both in terms of investing and trading. Today's exciting because we're going to kick it off by discussing everyone's favorite four-letter word, meme. Now, meme mania is no longer what it once was. Or a meme. All we have to do is look at the poor round hill meme ETF, which is down roughly 60% since its inception. Really tough time to launch a thematic ETF such as this. It is having a solid 2023 though, but really, what isn't? A rising tide lifts all ships. But when we're talking about meme stocks, we have to remember, Revlon is gone, Bed Bath & Beyond has gone belly up. Favorites like GameStop and AMC, those are down sharply from the highs and the true mania we saw back in mid-2021. Now, we all know meme stocks are destined to rocket higher, but then crash and burn. It's inevitable. But both sides of the trade offer money-making opportunities. Be warned, though, trying to fight the trend here is more dangerous than trying to fight the Fed. That's where everyone gets hurt. That's where everyone blows up their accounts. They exclaim, this is an overvalued piece of crap. I'm going to short the heck out of it. Oh my God, or this is so oversold, it's down more than 50%. I'm going to load up on it. And what ends up happening is they start making their moves way too early. But I can help, which I'll get to in a second. It's important to remember, though, that you can think a company from a fundamental standpoint is a piece of garbage. So what? Who cares? That doesn't mean the stock is going to collapse. It may eventually, and you could be proven right. But most importantly, will you still be solvent when that happens? Right? So meme stocks and other sort of like high profile stocks, there's this tug of war between the bears and the bulls and all this collateral damage in between. Right? You have these huge parabolic moves, which in turn creates this nagging sort of trigger finger itching temptation to try and time the top as well as time the bottom, and that you're going to walk away with these quick, fantastic gains. It's not that easy, but I can at least give you some guidance here, because my advice in those scenarios is rock the VROCK. Ignore RSI, ignore MACD, ignore Bollinger Bands, money flow index, or any of those other indicators you believe is going to give you an edge. When we're dealing with any sort of mania, whether it's meme stocks or even regional banks like right now, we're talking about the madness of crowds. And my favorite way to measure this and to get the pulse of it is with volume rate of change, or VROCK. This tells us if volume is in an uptrend, it'll be a positive number, or a downtrend, which is a negative number. More importantly, whether the current price action or the current price trend has any sort of conviction, right? This is key. If VROCK is rocketing higher and shares are surging, don't short. It's stupid. Ride that trend. If VROCK is falling and shares are declining and VROCK is plunging into negative territory, don't be an idiot. Don't buy it, right? Don't try to catch a falling knife. The trend is your friend. Stop trying to fight it. Stop trying to swim upstream. You're not a salmon, all right? But you can add VROCK to your technical analysis toolkit. And what it'll do, it'll give you a temperature of what's happening underneath the surface with that madness of crowds. So let's take a look at that right now with AMC. All right. Let's pull up our AMC chart. Right here at the top, this is our candlestick chart. And here on the bottom, this is our histogram of VROCK. Right off the bat, we can see VROCK for AMC deep in negative territory. What's also happening, we can see here, is shares are moving lower. Shares are moving lower and VROCK is falling. You are not buying this, right? Stop trying to pick a bottom, right? Just ride with it and short it. Right, so that's one side of it. The other side is looking at these peaks, right? We see all these peaks throughout history. We go back and we see them repeat it again and again and again and again and again. There's a level with AMC that you really want to watch, and that's going to be the 100 level. This is something that's been in the past, as we can see back here. You'll see shares surge. You'll see VROCK go above 100. That has often been a signal that a reversal is approaching. And it's not just with AMC. It's also with plenty of other companies, including GameStop, GME. So if you're riding a wave higher and VROCK crosses above that key level, like it did back here, well, it's probably time to start thinking about shoring up your position, tying up all those loose ends, and looking for a move in the other direction. Now, at the same time, like we see here, from September all the way through to December of 2022, if VROCK is negative, but it is approaching going green, that's a signal that you're about to see a breakout or a breakdown of some sort, depending on the direction of the price, right? So if we look back here in August, we see this big spike in the VROCK, but the selling just accelerates, right? Right here, what we're looking at is this move into the green. We see shares jump. Now, this breakout or this breakdown, it could be brief. It could also last several days or several weeks. But those are like the two real important levels that you're paying attention to with VROCK, as well as with the overall price action. Now, I love VROCK when we're talking about the madness of the crowds, right? Because like I said, that gives you a way to get a pulse of what's happening, a temperature of where that madness is pointing. This is an approach that I used in 2022 with Bed Bath & Beyond, kind of picking the tops as well as the bottoms and how to play it and when not to short and when to really start thinking about going short and going long. My rules of thumb with VROCK is if price is moving higher and VROCK is positive, you do not short. If price is surging and VROCK is accelerating, all you do is just go with the flow. Don't try to fight against it. Just buy calls. But once VROCK tops out, it starts going up above 100, particularly with AMC, GME is another perfect example. Start preparing for a potential reversal. Now, if you're looking to short something or buy puts, be patient, right? Wait for the VROCK to start to roll over, and then all you have to do is pocket profits on puts as you get this inevitable slide. VROCK moves into negative territory. That undertow drags down the share price with it, right? And all you have to do is sit there and collect your gains. So if you're looking to trade meme stocks or other high profile stocks, remember, rock the VROCK. You won't be disappointed. And best of all, you won't find yourself trying to swim against the current, but you'll be flowing with it. And that's what makes you a successful trader. That's what makes you a successful investor. That's what keeps you sane in an otherwise insane environment. And more importantly, it keeps you on the right path to financial independence. All right. So until next time, I'm Matthew Carr, technical trend strategist for Money Map Press. And this has been The Trend is Your Friend.